collaborating in the past almost half a year. We had rolled out a lot of content, and you can check it in our Substack that we are sending now to the chat if you want to find out more of what we have been doing. And also, we are currently putting together a practical guide for climate deep tech founders in Asia based on our collective experience. And it will share real-world insights on commercializing innovation solution in the region, from early validation to scale across the market. And everybody who joined this event will get a copy of it in your email when we're rolling it out in a couple of months. And without further ado, I would like to introduce our panel today. We have Team Vliet from ENGIE Factory. Team, can you wave to the audience so they know who you are? Yes. And we have now Pham from ADB Ventures, and Alina from the Radical Fund, and also Đức from USBC. Yes, that is for the intro. I think because we only have 1 hour, I jump right away into the source, right? The thing that everybody is here for. Okay, so talking about scaling a technology or scaling any business, there are a lot of things around that. And in this webinar, we like to focus on 3 topics that we think are, let's say, most important and founder has more question about. First is go-to-market strategy. Second is product market fit. And the last one is raising fundraising. So I will go first at go-to-market strategy. And for this, we have a little poll for our audience to join, to tune in as well. And I will, and at the same time, our panelists will join the poll as well. I'll now put on the poll, and audience, please choose, and it's going to be only 1 minute. Basically, the question is, should climate tech founder prepare to go global from day one or focus on conquering local market first? And for this, please panel, write your answer in the paper and we'll show it later so nobody can change their mind, right? Thirty seconds. We only have 20 people joining the poll now. I'll close it in a bit and we'll start discussion. Okay, still people picking options, right? 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, close the poll. Okay, panel, can I see your answer in the paper? You can unmute yourself. Đức, what is your answer? Sorry. Okay, Pham is global. Okay, team is local. Đức, local first. And Alina, what's your answer?
My answer was it depends.
Oh, it depends. Oh, I think you have to pick. Okay. So we have, okay, so we have
the rules.
1 person said that it depends, 2 persons said it's local, and 1 person said it's global first. So I asked Pham first because you are the only person who say global first. Why should they be aiming for global first?
Yeah, I think actually for me, just one away from it.
We're not hearing you very well, so maybe yeah, slowly.
Use my earphone. Is it better?
Yeah. I know it's not going. We cannot hear you still. Sorry guys, technical issue always happen in webinars.
Okay. I think I can hear you already. Okay.
Okay, I'll try not to move. Sorry for that. For me, the reason that I pick global, it's more, I think at the end of the day, if founder can, I believe that they would probably not say no to a bigger market, right? But then in many cases, there's some other constraints that like doesn't really allow them to go beyond the local market. And also operating in, especially say climate or hardware, sometimes it's just harder to go global market. But the reason that I choose global is because I think if your intention is go to global, then your mindset needs to be clear since day one that you want to become a global players. And by saying that is because I think many times when we talk to local startups and they told us in the beginning that they want to become a global player, but after 2 or 3 years pass, they reach the state where they are really stable. They create a lot of cash and profitability already. It's really hard at this point of time for them to go back to the initial point where they don't want to expand to new market. So to me, it's more intentionality. If you really want to become a global player, then that mindset needs to be clear. It doesn't necessarily mean that you need to expand into other markets right now, but it's more to set that mindset and have flexible enough business model and trying to figure out the model that is replicable enough for you to expand to other markets. That's why I answer global. Yeah.
Makes a lot of sense. And Tim, to accuse again that, what is your defense?
So yeah, I got local, right? I think for a startup, it's very important to interact with your customer, to really get to know your entire company. And often that's easier when it's on a smaller scale. Let's say right in your backyard, right? You can travel to your customers, you can get that feedback, you can iterate very quickly without having to travel somewhere else, for example. And also budget-wise, you can do more when it's local rather than kind of in a global setting. And the last argument, I think that in terms of climate tech, a lot of the markets are vastly different, right? In terms of infrastructure, kind of energy-specific things in terms of pricing, energy pricing, the type of local partners that you need. Is often much harder to scale a startup that is reliant on one of these factors across different geographies at the same time. But at the same time, I agree with you, Pang, that it's very important that we do that with all the ventures that we launch. For example, we have launched a few ventures in the Philippines, where we know that initially we actually focus on the Philippines as local first, right? But then as global, we make sure that for the founders, they understand that. So the founders could, for example, be international. Doesn't necessarily need to be Filipino. As ENGIE Factory, we build the ventures ourselves, right? So it's maybe a slightly different model from a typical VC structure. So we are okay with international founders who are ready to kind of scale this across the region, not just the Philippines. So I agree with you, Pang, that we should always keep that vision that you want to be everywhere. But to us, it's really kind of let's dominate the niche, which is kind of the startup saying, right? Like you really need to be very good at your own backyard. That you can only be very good at your own country, and before you take the second step in expanding to somewhere else.
Great, that makes a lot of sense. I'd like to hear Alina. Like you said that it depends, and yeah, what would be the best scenario where, or so I would say, what's the example of a business that should be going global right from day one, and what would be the one that they should be focusing on local market first?
Yeah, it's a great question. And maybe just to take a step back a little bit, I think there's this rhetoric that we sometimes hear in that, climate is a global phenomenon, and therefore, climate is we're in it together, and it should be solved as a global disaster and a global crisis. It's true, obviously, climate change is global in nature, but to Tim's point, it is felt very differently in regional and local contexts. And I think that's very important to keep in mind. And I think it is specific to climate tech founders and startups trying to scale. Look, usually I would say you have to start local. As an early stage entrepreneur, you have to build your product, build traction, get some funding, use your initial market and use it as a test bed before thinking about scaling either your user base or changing and expanding on your product and therefore expanding to other geographies. That would be my usual answer. I think with climate tech, and the reason I said it depends, and I think Pham referenced it as well, is to me, it very much depends if you're an IP-led, kind of very disruptive, innovative, deep tech company that is actually applicable to sort of global challenges. And we have had and have a few for those founders. So, for example, we have a company in maritime clean tech called Alicia Bots, and they from day one, it's a Singaporean company, but from day one they're thinking globally because they're a maritime company, right? And therefore it's very much applicable to the Middle East, and they're now also expanding really rapidly in Europe, in addition to Southeast Asia. But then you have other companies that are, let's say, in waste management, in agriculture, in water tech, for example, that really need to think sort of local first. And again, as Pham said, consider the regulatory environment as well as the specificity of the business model innovation. So again, IP-led, product-led, disruptive, deep tech versus business model innovation that is very specific to that specific market, that specific region, that might need to start out local and then think globally.
That's a great answer, Alina. I'd like to ask Dirk also to expand on this point, like for you, because you picked local first, right?
Yeah.
So then what are the signals that tell founder that the local market is big enough? Because I asked this question because I came across a startup from Northern Europe where the population is only a few million. So they might say from the beginning it's going global, right? Or Singapore, so very little people, so they don't have enough market. So for them, local market is not enough, so they have to do global from beginning. So I asked this question that for startup who want to, like if they decide that they're gonna do focus on local market first, what is the sign, the signal for them to know?
So for that one, I do agree with Alina that climate change is a global challenge. So we have to deal with it with a global mindset. And we should build the product, the service right at the beginning that can serve multiple continents and country. But to me, the go-to-market can be very flexible. You can choose the global first. You can choose the local first. But at EarthVC, we will prioritize the go-to-market from the small niche and high purchase powers, strong demands, with strong regulation support, for example, to prioritize us first and then scaling to oversee later. I think that is the very good approach to survive, to keep to get the traction in a very small market, and then when you are in very healthy condition to scale overseas, you can scale faster. Because you know that in the early stage startup, you have a very limited resource, right? You have a few people in the team, you have only a few million in from the funding from the private investor, and you only have a few 18 months to 24 months to scale. The reason why you got to find the area that you need to prioritize. And if you can go global at the day one and still thriving, you should be a very fabulous company. Otherwise, you should focus, you should prioritize the local market first. And to be honest, I have never seen that any successful case that pursue global first. So I would say that I will try to go local first.
And so what I hear is that so founders should prepare for in the long term they go global, but first it's better to focus on your niche, on the market that you can conquer locally, right?
Exactly. I think that you building up your early traction is very important. So find the market that can adopt the product as soon as possible.
Right. I see a lot of nodding, so I don't think we have to argue for and against in the topic anymore. Let's move on. All right. After go to market strategy, we have product market fit, and I also have a little poll, same with the previous one. And what I do is I will also start it for the audience. And panelists, please write out your answer on paper. So the question is, what drives market readiness more? Policy, infrastructure, usability, or cost? And I will explain it a bit. Policy, either government support or regulation enabling the adoption. Usability means is the product practical enough for real world use? And the last one, cost, means can customer afford it? Out of three of these, what do you think is the top one that drive market readiness? All right, we have people picking, choosing. Sorry, people already. We have almost 60 people in the room. Come on, guys. Oh, it's time up. Right, I'll close the poll. Only 33 people enjoy the poll, unfortunately. All right, back to the panel. Can you show your option? So I see, okay. Usability, Pham said. Team said. Infrastructure, also usability. We have one team here. And Đức, can you show your also usability? Wow, would be a one-sided. Alina, what's your answer? I will not take it depends anymore.
As I said, usability.
Okay, wow, we have a one-sided, what to say, it's not a debate anymore. Now everybody contribute to this point. Why do you choose usability? I picked Đức first because he said speak last the last time.
Okay. I mean, for me, cost effectiveness can only be achieved at scale, right? I assume that. So if we talk about early stage companies, especially hardware climate tech stuff, for example, cost-driven adoption is not realistic practice to me. So that reason why I refuse to pick cost, right? The second option is regulation, right? Regulation or policy support can be a great catalyst to accelerate the market adoption and help the startup to achieve the PMF, the product market fit, faster in many cases. But I think policies or regulation is always lacking behind the technology innovation curve. And I would prefer companies with product market fit without the policies or the regulation support. The reason why I pick usability and why, because I believe that there will always be someone in the market having a burning problem, a very big challenge that can be solved by your product, by your services. And innovators, for example, innovators are early adopter are a group of people before the chasm you need to sort out in the early day. And that's why the go-to-market is very critical element to determine the startup success in the early day, right? So the reason why I pick usability.
Alina, do you have anything to add to the point?
Yeah, I'll build on that. So I think one of the mistakes that I have seen that founders, and specifically in climate tech, make is rely on regulation or regulatory tailwinds. I've seen this in the carbon market. I've seen this in EV sort of industry. And whilst it is definitely an important factor, it is a critical factor in climate tech, especially when thinking through, again, disruptive sort of technologies that will take time to commercialize due to regulation changes or lack of regulation at this point, licensing, etc. So regulatory aspect is critical, but I would always say, please do not rely on a regulatory tailwind to happen in order for your startup to succeed and to scale. And so that's the one mistake that I see. Then the second mistake that I see is when there are some kind of, let's say, windows, climate financing initiatives, some form of regulatory sandboxes, is founders mistake the kind of the early traction that's driven by these, let's call them subsidies, in funding terms or regulatory terms. They mistake that for sustainable demand. And so when there is an opportunity to have regulatory sort of tailwinds and that sort of enabler, that absolutely needs to then shift into your traditional let's say metrics. Again, that's usability, that is sound unit economics, and that is, you know, getting to operational PMF, product market fit, but, you know, operational sustainable team that will drive this company forward. So please don't rely on just the regulatory aspect of the business when whilst we know it is a very important and critical component in climate tech.
Right. I would like to ask Pham a question that contribute to this. Like, if you also agree that usability should be the most important factor, then do you think it will shift? Can the most important factor shift over time? Like, yeah, what do you think?
Yeah, I think at the end of the day, I think all the three options that we choose in any market, I think will need to come all together anyway, regardless. I think I agree with Alina as well that policy can probably get you first adoption or even create the market, say compliance market. But at the end of the day, you still need a combination of cost and usability to get you better growth. Probably taking one step back, right? I think finding the right product market fit is also finding or ensuring that your solution is actually solving like real urgent problem and someone is willing to pay for it. So usability is a part of it where you are making sure that you're solving the right problem. And then I think costs also actually come to play here as well, since when, say, if you have B2B clients, at the end of the day, if they decide to pick your solutions over the existing solutions in the market, they also want to know as well, like how much more revenue they can generate using your product, how much more cost they can save, and also what's the payback period if you compare it with other legacy system, right? So even if that shift can change over time, but I think at the end of the day, it also comes down to always come down to willingness to pay, who are you selling to, and how long can you sustain your kind of cost structure and offer to the market. I hope that
No, for sure. Yeah. I'd like to move on to Tim, and I'd like to ask you, because everybody's arguing for the usability now, and you probably agree with a lot of the points that they already said. Do you have any example that of a startup or a team that you've worked with that they have everything in the policy and the cost, but because of the usability, it didn't work for them?
I think usability, and I agree with everybody here on the panel, is the first one I would think of, right? And essentially, if I would think about usability, I would think about being very customer focused, right? So if you're developing a product, a startup that lacks usability, it essentially means that you will not have, that it's not customer focused, that you're not addressing a pain point, which basically defeats the purpose of a startup. So I don't see any scenario where, well, maybe a few, maybe exceptional scenarios only, where infrastructure and policy is in place, but no usability. And I would say that the only exception would be you're getting amazing subsidies and tax breaks or and grants. Then you can kind of get a subsidized business going on, and you can you can sell your product at a discount, and then you can make a little bit of money. But the moment, as Alina mentioned, as some of the others mentioned, the moment these these grants are gone, the subsidies are gone, you're going to be left with a product without true customer interest, and then you're going to be back to square one, right? So maybe to add to that, I wouldn't say that kind of as a startup taking these grant money or subsidies is a bad thing. It can be a very positive thing if you can, if that can kind of accelerate you to sell your products faster in a specific market. But you should always keep for example, your unit economics in mind, saying that, okay, without these subsidies, would I still be profitable in the market? Would my customers still be interested in this? And if the answer is yes, then actually, that's fantastic. The subsidies will help you. But if the answer is no, it means that you're not running a viable business, and you should be thinking of figuring out how to fix that and become more customer focused so that somebody wants to buy it at the right price.
Yeah. So I was looking at the poll results actually, and most of our audience also agree with all of you that the usability is the most important factor to drive market readiness. So I think, because before the panel session, I was thinking there is no right or wrong answer. It's just we're sitting here and we looking at each other's opinion. But now after this poll, maybe we have a right answer here. Usability. Founder, focus on usability, on your the usage of your product to target your customer before, so that you can enter the market. Right. I think we can move on to the next session. And also, sorry everybody, I forgot to remind, if you have any question for our panelists, please type in the chat. We have a Q&A session at the end, about 20 minutes. So we can go through all of these again, back to from product market fit to go to market strategy, and now also fundraising. And yes, next one is fundraising. So climate tech, I think for everybody, fundraising is difficult, right? It's not easy to ask for money at all and to raise funds for startup. And I myself have been in the position that I have to go do fundraising, and I think it's really difficult to all the time getting no for an answer. So and even for VC here, sitting here, we have responsibility with our LP. So even with the money for us, it's not easy to just give it away, give it out to startup. So I hope this conversation will make it easier for both sides. And we asked this question because I see that climate tech is one of the sectors that kept underfunded in Asia. And some people argue that it could be due to lack of quality deal flow, or it could be that the founders are not good enough at selling themselves. So my question is, do you think founders are failing to communicate their story in a way that is resonate with investor? And if yes, how can they bridge the gap between their climate tech business and investor expectation? I'll let somebody to raise a hand if you want to go first this time.
I'm happy to go first. So I think, and having been in the shoes also as a founder raising money, I know it's hard and frustrating as you said, but it's interesting kind of from an investor perspective to see what an investor is actually interested in. So I think there is indeed a bit of a gap in terms of what the founder thinks is relevant, what is actually relevant to a VC. So I think one suggestion to a founder would be to understand what this investor is actually interested in, right? And what is their mandate? For example, with us, ENGIE, we're part of a large. ENGIE Factory is part of ENGIE, which is a large energy group, right? So one of the things you could do is that, what are your activities, your business activities, and how does my startup that I'm pitching align with your activities, right? So, but if you're maybe pitching to ADB, then you can kind of try to understand ADB's mandate, right? And I think that is very important. But also, I think some general comments are always applicable to a founder's pitch to a VC, which is be very clear, explain very clearly on what you do. It sounds like a very basic thing, but you have to communicate what your product is, who the team is, what the traction is, what the unit economics are, and what your vision is. There's a couple of things, but often when I listen to, not often, but sometimes when I listen to a pitch, I listen for 15 minutes. I still don't understand what the founder is doing, which is a real shame, right? Because often they're actually doing something amazing. So you want to catch the attention of the listener, explain it in a compelling way, in a credible way, and make sure that you cover the basics. To pay attention to covering the basics, explain what you do, what your vision is, and the financials, and at the same time, as I mentioned, understand who you're talking to, understand the VC, understand the investor.
Yeah, so in a way, beside the content is also about the pitching skill, right? If they pitch for 15 minutes and you still don't understand what they do, it's a huge problem.
Absolutely. And maybe one thing to add, right? In my days of pitching to 50 plus investors in Southeast Asia, one of my learnings is that the climate angle is relevant to climate investors. And unfortunately, many journalists and investors, I could basically look at the investors' eyes, and when we were talking about our slide around the fantastic abatement potential, they would not be very interested. But then the investors that do have a climate tech mandate, they are, right? So that goes back again to understanding who you're talking to and tailoring the message to the investor.
Thank you, team. I'd like to turn to Pham and Đức, because I believe as like member of the investment team, you guys are the one who look to like countless of pitch every day and meet a lot of startup every day. So what are the things that you see that most of the time it's missing from the pitch from the founder, or something they get wrong that you think they should add in or they should always include? Yeah, maybe Pham, you go first.
Yeah, I think apart from, I think especially for climate tech or deep tech, founders spend a lot of the time talking about how interesting, like how cool that tech is, but usually they forgot to talk about how can they sell the product, like who will pay for it, and why it is now. So I think two things I would suggest founders do. First, show that kind of that willingness to pay. If you already have early tractions, I think that's great. If you don't have it, then you still should show time with a co-development project, early project, even say LOI with some of the partners. I think at least show some sign that someone is willing, right? And then another part of it is once you show early traction, right? We also want to hear what's the forward. How would you use our money? What would this get you to milestone in the next, say, 12 to 18 months? We also don't want the capital to any kind of growth story behind it, right? So just first show some of A, and second, be very clear how this funding round to do.
Because your audio cut a bit, so I'd like to rephrase and to see if we listened it correctly. So instead of focusing on too much on telling the investor how cool your product is, showing the traction, right? Showing the investor who are the people willing to pay for the product, who are the partner that you working with, and also what are your plan of using VC's money, and what the milestone that you promising to achieve during the with the money you raise, right? And also the final point that you were saying.
Yeah, I think everything right? Point.
Can you speak a bit slower so the audio cut?
Sure. So I think here, what
No,
it's okay. I'll type in.
yeah. Okay, you type in. Then I'll move on with the next question. This one is for Alina, because I think because you are a managing partner of Radical Fund, so I guess that you don't you would sit in IC and not really working directly with deal flow, right? So for you, your view of the deal would be in IC, and you would have to make decision maybe on investment without meeting the founder, like the investment team. So what are the signals you look for when you hear your team pitch a startup to you during IC for you to decide, okay, this might be a good investment?
Oh, it's actually the opposite to what you were describing. You know, we're an early stage fund investing in pre-seed to Series A founders across Southeast Asia. We have a small but an incredible team across Indonesia, Thailand, and Singapore. Hopefully soon in Vietnam and the Philippines. But we are a small team. And of course we have you know, several of our team members doing a lot of the kind of deal flow sourcing and engagement with founders, but the entire team is involved in sort of understanding each solution through a very sort of structured process of conversations with founders, obviously due diligence with founders and their wider teams over a period of several weeks. Personally, I get involved in on a weekly basis in hearing and understanding who is sort of in the pipeline. But I think the most important thing to say and to emphasize is we don't invest in any founders as an IC that we haven't met the founder of. So the entrepreneur in the earliest stages of the venturing journey is incredibly important, if not the most important factor. And so, you know, we meet in person and we meet with their teams where it's, you know, physically not possible to meet in person. We have very, you know, deep dives and several conversations with them. So meeting the founders are a really, really important factor. And maybe if you allow me, I just wanted to comment a little bit on your previous question, which I wanted to throw a little bit of a curveball in the sense that I think we always sort of say that the founders need to be better at pitching to VCs and pitching to funds. Of course, there's truth in that, and of course, you know, we are all sort of learning and kind of evolving. But it's also on the VC's responsibility, and it's the VC's and investors' imperative to really also be curious and understand the founder and the climate tech company that they're building. And the reason I say that is because climate tech is actually quite a broad, and in our sense, you know, we focus on mitigation and adaptation companies, which means it's not just energy and it's not, you know, just the built environment. It's also things like disaster risk management, health tech, water tech, food tech, you know, agriculture, right? And so sometimes a founder might say, well, I am a health tech. And it is on the VC to really understand, you know, the right language and look under the hood and understand whether you are actually a climate focused or climate enabled or climate related company, right? So, you know, the language around what is a climate tech needs to be understood, and the VCs need to take that step to really hear the founder and what they're building and help them understand if there is a climate angle. We spend a lot of our time understanding if the company in logistics or in the built environment has a strong climate potential to contribute or to reduce emissions through their scalability. That is the work that we have to do, and not just the founders.
Thanks, Alina. That's a very good insight. Do you have anything to add to that?
Yeah, I would love to jump in a bit. I think that what most of the founder emissions is they don't understand the real expectations of a venture capital investor, right? So most of the time, the VC investor, when they invest in your company, they would love to see that investment going to return the entire fund. For example, if they manage 50 million, for example, and they invest in your company 3 million, they can't expect that 3 million gonna turn into 50 million at the exit, right? And so definitely you got to foresee the exit valuation of your companies. If you have no opportunity to return the investment, that I don't think that there is a chance that you can consider, they're gonna consider the investment in your companies. And that's another thing that most of the time the founder, they don't really understand the inherent risk with their business. So it could be technical risk, it could be a business risk. And you got to know what exactly is the risk of the company from ideation stage to the scale up stage, and what is the plan to mitigate it and increase the chance of success and hit the exit, the promising exit that could return the fund for the investor and give you the opportunity to become a successful company.
Thanks, Dirk. I'd like to come back to team a bit, because we talk about interacting with founder in pitching and meeting founder after they pitched you and such. But in ENGIE Factory, I understand you do also venture building. So you work with startup from day one, and you only invest in teams that you guys work with. So you get more touch point with the founder, right? So during that time, what are the common things you've seen in the team that most often success? That would, without, I ask this because sometimes if you only meet founder for a few times, or only see the pitch, you wouldn't see those points. But working with founder for a while, you might notice.
So you're asking kind of what kind of traits are we looking at when we're working with founders, right?
Yeah. So yeah, exactly. The trait that you look at. Yeah,
exactly. And maybe to give some context to everybody on this call. So yeah, ENGIE Factory, we don't necessarily invest as a typical VC. We look at topics that are of interest to us, or we like to work with, and then we like to work with founders that come in, and together with the founders, we spend a long period of time, 4 months up to half a year, to take this topic that is really a topic, identify the pain points, and from these pain points, we create a business model around it, do pilots, and then eventually we invest money into the venture. So this is a very kind of intimate relationship that we have with these founders, right? Very closely, we work very, very closely with them. So as you said, it's extremely important for us to be able to work with amazing founders. That defines 90% of the quality of the venture that comes out of it. So what are we looking for, right? When these potential founders come in, there's a few things. One is grit. I think grit is an extremely important skill set for a founder, but it's a very difficult one to understand in an interview process, right, or in a few calls. So it's something that we gauge, but it's to be honest, it's kind of impossible for us to know immediately. But it's very easy for us to see that after a couple of months of working with somebody. So that's one of the benefits of kind of a venture building program to us. A second one that's important is coachability. I think everybody is everyone has their own experience, and I think it's always good to get some advice. So being a founder that's open to discussing new ideas, maybe changing some things, that is absolutely key to us, because we've been doing this for quite a while, right? So we'd like to really work in partnership with the founders. We listen to the founders, but we also hope that founders will listen to us, and kind of together we can create, as a partnership, and create a new venture. So that's the second one. And maybe a third one to add is kind of some entrepreneurial experience is definitely something that we're looking for. If you're coming out of a corporate for 15 years, often you're kind of ingrained with a different type of mindset that is fantastic for certain areas, but probably not that suitable for running a venture that will require a completely different type of mindset, right? However, we can make exceptions if, for example, if someone has been working 10 or 15 years in the energy industry, and but let's say for the last 5 years has kind of been working part-time at a startup, or kind of running a side business, or kind of having different type of experience that kind of proves that it's not just kind of this corporate mentality that's there, but there's also kind of openness to embrace entrepreneurial mindset. So I'd say to conclude, it's these three things: kind of entrepreneurial experience, entrepreneurial mindset, coachability, and grit.
Alina, do you have any trait that you look for other than that in founder when you're looking at the case?
No, I very much agree with that. I think domain expertise is really important. Again, this doesn't have to be, you don't have to be a scientist. You don't have to have kind of a PhD in a specific industry, but you do need to have some expertise in the sector that you're, again, building solution. Why? Because then you're able to understand and build a potential innovation and solution aligned to a specific problem. And if you've spent 15, 20 years in the industry, you're more likely to understand it. So domain expertise is very important. And as Tim said, all the kind of aspects around also being a really great leader. As a CEO, necessarily, again, a founder doesn't necessarily need to be a CEO, but if it's a founder CEO dynamic, then the ability to build a team and understanding what type of a team they need to build and when. Again, this kind of goes a little bit more into the kind of the recruitment aspects, but for example, not every single company needs to have a head of sales from day one or day two, right? And it very much depends on obviously the business model and the business itself. So understanding what type of gaps the CEO has, and what is required to get this company to scale or to growth and then to scale, is something that we also test for when speaking to founders.
I hope a founder is a room keeping note of all of this insight from venture capital, so it helps you raising fund easier. I think it's the end of the panel discussion, but we're moving on to Q&A. I think, Alina, you have to leave for another event in a bit, right? So Alina will put her LinkedIn on the chat, and you can connect to her and connect to Radical Fund. Follow them. If you see that their mandate fit your startup, please reach out, send a pitch, reach out to her or her team. Thank you, Alina, for joining us today. Hope you have a good interview.
Thank you so much, everyone, and my deep apologies. It's been a wonderful conversation. And to all the founders in the room, please keep building. There's no better time than today to start or build a climate tech startup in Southeast Asia. I'm really, really proud, and my heart goes out to all of you for all the efforts that you put in. So thank you, and thanks to the team and my colleagues. Bye-bye.
Bye-bye. Thank you, Alina. All right, let's jump to the question and answer, Q&A. My teammate has helped pick us top question for, and without further ado, the first question, we all see it on the screen, right? Pre-seed via seed stage in deep tech startup. What distinguishes these two stages? Your expectation in terms of technical readiness, traction, etc., and valuation. This is from Zhang Huang. I give it to Đức this one because the person who asked is obviously a Vietnamese.
Okay, I can answer this question briefly like this. What is the difference between pre-seed and seed stage? If you are looking for the risk, the inherent risk to this stage, it's gonna be different. For example, at pre-seed, commonly this is the stage that you are forming a team, right? So to the pre-seed, team formation is the risk at the pre-seed stage. For the seed stage, you are trying to build a prototype, MVP, for example. So that's gonna inherent to the technical risk. So if you are dealing with a team risk, it's the pre-seed. If you're dealing with the technical risk or the product risk, for example, it should be the the state. And what is the expectation of the technical readiness? Commonly for deep tech, I think for pre-seed, most of the time at the TRL technical readiness that it levels around 3 or 4. At seed stage, we're gonna look in around 5 to 6. And the valuation, I think that there is different benchmark of valuation in different countries. So I have to say that I have no answer, exact answer for your question at all. But most of the time the valuation gonna be negotiable with the investor. So if you're looking for investment from some investor here in the panels or in the room, for example, discuss with them and find an acceptable range between two sides, both sides. Yeah.
Do you have a different definition for this, Pham, or team? No, everybody agree. All right. Then we move on to the next question. Okay, I think it's coming. Yes. Okay, we have a founder. I'm building an agri-tech startup in Indonesia, and I often see that great technology alone isn't enough without ecosystem support like market access, farmer readiness, and local policies. Without them, they fall. So in your view, which is more critical for real impact in climate tech, the technology itself or the enabling ecosystem that allows it to scale? I think I passed this question to Pham because I understand ADB is based also in Indonesia.
Yeah, so I think just take one step back, right? To answer this question, I think it's not really picking either technology or the ecosystem. It's more like taking an approach of problem first. It really depends on what kind of problem you're solving and whether that problem can be solved specifically through technology. Because I guess the challenges that you are facing is probably more on the, say, market access front or more supply chain management front. Then even if you have technology mode there, it probably doesn't create that much differences comparing to other solutions in the market, right? So I think at the end of the day, it's just taking one step back, looking at the real problem in the market and what's the best approach to deal with that problem. And if technology can get you that advantage, then you have technology as a solutions. But if market access is what really required to get to the market, then it's market access. So I think really depends on the context and condition of the market.
All right. If you, audience, if you want to ask more related to these questions, please just keep sending it in the chat. Thank you, Pham, for the answer. Okay, can we move to the next question? We have a lot of people still typing. Okay, what is your favorite way to get to know founders and keep in touch with them? Team, can you take this?
I think let me answer this from a venture building perspective, maybe a typical venture capital perspective. I like to get to know my founders, or wasn't my founders, the founders that we invest in, right? For example, by going on a trip with them. If, for example, the founder is looking at sourcing their new products from China, I love to join them, spend 2 or 3 days with them, kind of spending time in a taxi with them, spending time to understand their business very thoroughly, and kind of like build that relationship with them, so that you build a kind of trustworthy relationship, right? So through that, you kind of really understand the person, you really get to understand the startup, but also they and the founders would really get to understand you, and you can kind of build that trust in the relationship. So that's something I like to do, basically spending more time. So that's what I would answer from a kind of venture capital perspective. I think maybe answering from my previous kind of role as kind of being a startup founder, well, my way to kind of build this relationship with investors is that you would have multiple touch points with somebody. Again, like building a relationship over a longer period of time, and every single time being able to provide certain news or certain traction updates so that an investor can see. I think there's called a kind of a dotted line strategy. Basically, every time you have another data point that this company is like doing a little bit better, and if you kind of connect these lines, you can see there as kind of an exponential growth. That was my strategy as a founder, and I think that's also really nice as an investor to see kind of you're keeping in touch with the founder. Every time you talk to them, there's a kind of a positive update, and you're seeing kind of these positive developments. So that is not just kind of a snapshot in time, but it's kind of a trend that you're seeing.
Yeah, I think this is also like depends person to person, right? Because it's not, there's no right and wrong. Do you have a different way to that you like to get to know your founder?
I think the best way to get to know founders is to become a friend with them very, very early on before they get the investment from your firm. So be their friend.
Makes sense. Right. I think we have time for one more question. And of course, if there any question that has not been answered here, we'll take it into account and put it in our report later. So no worry if your question is not picked. All right. How is climate tech protected by intellectual property laws in Southeast Asia? Are there any reported cases of IP infringement in the region? If so, can you share specific example or stories? This is from Nisha. Yes. Who would take this? I don't want to just put it on you. Difficult question, I guess. Đức, maybe can you take this, because we do a lot deep tech here. So do you have the
I think nowadays the IPs should be protected globally, not just within South Asia. So if you have an opportunity to submit for the IP protection, do it on the global scale, and I mean, include in your local country as well. And with my experience at Earth Venture, I had never experienced an IP infringement in this prison, so I have no idea to tell.
Sorry, Đức, you were saying.
Yeah, same here. I don't have direct experience on this, but I think it also depends on the type of technology as well, and the target market that you're going after, and whether that it's hard or easy to replicate what you're doing. Because at the end of the day, I think it would be great if you can file IP at global level, but sometimes it's also come with costs as well. So just need to strategize that well. Like, what would be your priority in terms of picking the market that you want to have that IP first?
Right. We're running out of time, but I feel like our audience is really want to get their answer, their question answered. So is it okay if we expand it a bit, panelists? You okay with that? Right. Okay. It takes 18 to 24 months before we can see revenue. What is the best way to frame that in a pitch? Okay, team, you answer this.
So I mean, I think for many startups, they will not have revenue immediately, right? So we were talking to somebody, an investor. They will be completely understandable of the fact that it's going to take a while. But what you need to do as a founder is that you need to create some credibility around the timeline. So why is it going to take 18 to 24 months? And provide some underlying facts that support that. For example, right, if you're doing your product development, you can be very detailed and specific where you are in your product development track and why it's, for example, going to take 12 months to finish this, right? A second bit, from a commercialization perspective, it's similar. So, for example, how can you validate that from a revenue perspective, you can actually start generating revenue after 18 months? It probably means that after 12 months, you would have already identified your customers, or maybe even before. So maybe you can work through letters of intent, or wait lists, or anything else that kind of indicates that there's actual interest in this. And this actual interest will most likely convert into revenue down the line. So the stronger this kind of interest can be shown, the better to an investor, right? So LOI might be nice, but if it's a very loosely defined LOI, it's probably not going to be that valuable. But if you have an LOI from a very large, credible company that has put a lot of pricing details in there and a lot of details kind of that makes it more credible, I think that's better. Maybe you can get a deposit in advance. That even shows more and better kind of willingness to pay and willingness to engage from customers. So I think there's a lot of ways, but don't take it too easy and just say, okay, we're just going to be able to get revenue after 18 months without giving any kind of underlying facts and figures and data points.
That makes a lot of sense. Thanks, team. And I think that's the last question for today. Thank you all very much for joining this webinar from UpVC, ENGIE Factory, ADB Venture, and the Radical Fund. We will be releasing a report. All four of us will be doing a guide for climate deep tech founder on scaling in Asia, and it will be released in a few months. And we'll also put in the chat now the link of the four funds. So do follow us, reach out to the team if you want to talk with the investment team, want to pitch your idea to us. Feel free to do so. Thank you, panelists, for being here, for spending this time of your afternoon joining this webinar. And I think with this positive reaction, we can do more of this in the future. What do you think? Right. All right. Thank you, everybody. Have a good afternoon. Have a good evening.
Thank you, everybody. Bye-bye.
Bye.
Bye-bye.